Hello and welcome to EPK Capital, your go-to destination for in-depth financial analysis. A giant is stepping into the public market. The Tata Group, a name synonymous with trust and excellence in India, has launched the initial public offering, IPO, for its financial services arm, Tata Capital. This is one of the most anticipated IPOs of 2025, and in today's video, we are going to dissect it for you from every possible angle. So, what's on the agenda? First, we'll get straight to the point with all the crucial IPO details you need: the launch and listing dates, the price band, and the investment size. Next, we'll take a journey back in time to understand the history and evolution of Tata Capital. Then comes the exciting part, a deep dive into the grey market premium. We'll look at where its unlisted shares were trading 3 to 6 months ago versus the current grey market sentiment. Why the drastic difference? We'll find out. We will then decode the fine print, analyzing the key details from the prospectus the company submitted to SEBI. After that, we'll crunch the numbers and review Tata Capital's current financial health. We'll also uncover the unique aspects of its business model and identify the key positives and negatives you should be aware of. And finally, the big question: should you, as a retail investor, invest your hard-earned money in this IPO? We'll provide a balanced recommendation to help you make an informed decision. So, grab your notebooks, and let's get started. 1. Tata Capital IPO. All the key details. Let's kick things off with the essential details of the Tata Capital IPO. IPO dates. The IPO is open for subscription from October 6, 2025, to October 8, 2025. Price band. The price for one share has been set in the range of 310 rupees to 326 rupees. Lot size. The minimum you can apply for is one lot, which consists of 46 shares. Minimum investment. At the upper price band of 326 rupees, the minimum investment for a retail investor will be 14,996 rupees. Issue size. This is a massive IPO with a total issue size of approximately 15,511 crore rupees. Issue breakdown. The IPO is a mix of a fresh issue of shares worth 6,846 crore rupees and an offer for sale, OFS, of 8,665.87 crore rupees by existing shareholders. Listing date. The shares are expected to be listed on both the BSE and NSE on October 13, 2025. These dates and numbers are crucial, so make sure you have them marked down. 2. A look back. The history of Tata Capital. To understand where a company is going, you need to know where it's been. Tata Capital was founded in 2007 as a subsidiary of the mighty Tata Sons. It was the Tata Group's strategic move to create a formidable presence in India's burgeoning financial services sector. Over the last 18 years, it has established itself as one of India's leading non-banking financial companies, NBFCs. It's a customer-centric, one-stop shop for a vast array of financial products. Their services cater to three main segments. Retail finance. This includes home loans, personal loans, vehicle loans, and more. SME finance, providing financial solutions to small and medium enterprises. Corporate finance, catering to the needs of large corporations. Today, Tata Capital is the third largest diversified NBFC in India, with a loan book of over 2.33 lakh rupees crore as of June 2025. It has a vast physical presence with over 1,500 branches across the country. 3. The grey market saga, then versus now. This is where the story gets really interesting. The unlisted market, often seen as an indicator of IPO sentiment, has seen a rollercoaster ride for Tata Capital shares. Just a few months ago, in April 2025, its shares were trading at a peak of 1,125 rupees in the unlisted market. Even in early June, the price was around 1,075 rupees. However, fast forward to today, and the IPO price band is just 310 rupees to 326 rupees. That's a staggering discount of nearly 70% from its peak unlisted price. The current grey market premium, GMP, is hovering around a modest 22 rupees to 29 rupees, suggesting a potential listing gain of just 6–8%. So, what caused this drastic drop? Several factors are at play. The broader financial market has seen some weakness, and there was a rights issue in July 2025 priced at 343 rupees per share, which hinted at a more conservative valuation. Experts believe the unlisted market price was inflated due to lower liquidity and speculative buying. The management's decision to price the IPO attractively is a strategic move to ensure a wider retail participation and leave value on the table for new investors. 4. Decoding the prospectus, DRHP. Now, let's analyze the document Tata Capital filed with SEBI, the draft red herring prospectus. Objective of the issue: the money raised from the fresh issue, 6,846 crore rupees, will be used by the company to augment its Tier 1 capital base. In simple terms, this will strengthen their financial foundation, allowing them to lend more and support future growth. Offer for sale, OFS. A significant portion of the IPO, 8,665.87 crore rupees, is an offer for sale. This means the money will go to the selling shareholders, not the company. The primary sellers are the promoter, Tata Sons, and an early investor, the International Finance Corporation, IFC. This large OFS component is one reason why experts predict a more stable listing rather than a spectacular pop, as it increases the supply of shares available. RBI mandate. The IPO is also being done to comply with a Reserve Bank of India mandate. In September 2022, Tata Capital was classified as an upper layer NBFC, which requires it to be listed on the stock exchange within 3 years. 5. Financial health check. Let's look at the numbers that truly matter. How is Tata Capital performing financially? Profitability. The company has shown consistent growth. For the financial year 2025, it reported a profit after tax, PAT, of 3,655 crore rupees, up from 3,327 crore rupees in the previous year. Revenues have surged impressively to 28,313 crore rupees in FY25 from 18,175 crore rupees in FY24. Assets under management. Their AUM stood at a massive 233,363 rupees crores as of June 2025. Asset quality. This is a key strength. As of June 2025, their gross non-performing assets, NPAs, were at a healthy 2.1%, and net NPAs were at 1%. This indicates a prudent approach to lending and risk management. Peer comparison. While its growth is strong, its return ratios are slightly lower than some of its peers. For instance, Bajaj Finance has a higher return on equity. However, Tata Capital's valuation in the IPO seems more reasonable. Overall, the financial report card is solid, reflecting a stable and growing company. 6. Uniqueness, positives, and negatives. What sets Tata Capital apart, and what are the potential risks? Positives, strengths. The Tata brand. This is their biggest asset. The Tata name brings immense trust, brand equity, and a legacy of good corporate governance. Diversified business model. Their presence across retail, SME, and corporate finance reduces dependency on any single sector. They also have a unique focus on clean tech finance, financing green projects. Strong financials, consistent growth in profits and revenue, coupled with healthy asset quality. Extensive reach, a wide network of branches and a strong, physical plus digital, strategy ensures they can reach a diverse customer base. Negatives, risks, intense competition. The NBFC space is crowded with giants like Bajaj Finance and Shriram Finance, leading to pressure on margins. Interest rate sensitivity. As an NBFC, their profitability can be impacted by changes in interest rates. Unsecured loan exposure. About 20% of their loan book is unsecured, which carries a higher risk, especially in an economic downturn. Large IPO size. The large offer for sale component might limit sharp listing gains due to the high volume of shares hitting the market. 7. final verdict: should retail investors apply? We've arrived at the most critical question. Should you invest in the Tata Capital IPO? This IPO presents a compelling, if not explosive, opportunity. Let's break it down. For the long-term investor. If you are looking to invest in a stable, well-managed company with a strong parentage and a solid long-term growth story, Tata Capital is a very attractive proposition. The pricing is sensible, and it offers a chance to be part of one of India's premier financial institutions. The Tata brand provides a significant margin of safety. For the listing gains seeker. If you are purely looking for a blockbuster listing like Tata Technologies, which debuted at a 140% premium, you might need to temper your expectations. The large size of this IPO, especially the OFS portion, means a huge supply of shares will be available. While a positive listing is expected, the gains may not be spectacular. The modest grey market premium also points in this direction. Our recommendation. Considering the strong fundamentals, the trustworthy Tata parentage, and the reasonable valuation, this IPO is advisable for investors with a medium to long-term perspective. It's a solid company to have in your portfolio. For those looking for short-term gains, there might be a modest pop on listing day, but it's not a get-rich-quick IPO. The real value lies in the company's potential for sustained growth over the next few years. The attractive pricing is a significant sweetener that provides a good entry point for retail investors. So there you have it, a complete 360-degree analysis of the Tata Capital IPO. It's a classic Tata offering, solid, stable, and built for the long run. What are your thoughts? Are you applying for this IPO? Let us know in the comments below. If you found this video helpful, please hit the like button, subscribe to your channel name, and ring that notification bell so you never miss an update from us. Disclaimer: this video is for educational purposes only and should not be considered as financial advice. Please consult with your financial advisor before making any investment decisions. Thanks for watching, and we'll see you in the next video.